Eric Mother, Mother.com, with the U.S. market analysis for the weekend of January 30th and January 31st, 2016. And we are looking at markets here, which had a nice close on Friday. Dow up 2.4, NASDAQ up 2.3, S&P 500 up 2.5. VIX was down about 10%. Crude oil was up 1.5. And so let's take a look at how the market traded for the week. For the week, we see that the S&P 500 was up 1.75. For the week, the Dow was up 2.3%. And for the week, the NASDAQ was up 0.5%. So let's begin by taking a look at the NASDAQ weekly. One thing we can see here is if we take the weekly closing low, going back to this low here in October of 2014, we can see that the market has held that line, something like that. This has been, we haven't even broken those lows. So we held here in August of last year, and we came close here and we held. So we are looking at long-term monthly charts starting to look a little bit supportive of markets. And as we've been talking about on the NASDAQ, if we go back about 5 years on the weekly, so 5 years weekly on the NASDAQ, the level we've been watching, which might be coming into play right now, is that green line, which brought the market off the lows here in 2011, and since then the market's been using this for support. And we've been talking about this the last couple of weeks, that maybe it might play out that the market in the current drop comes back to test this green line and holds. So with Friday's move, this is becoming more and more possibility, because you can see here, if the market can continue adding on to the support here back above the green line, any support above there might suggest that week to week we shouldn't be too surprised if the market moves higher. Now that's the positive view. If you take a look at the market, let's take a look at the weekly, 2-year weekly. There's a price here that we want to watch, which is this recent weekly closing low. So let's watch that, because should the market move below 4,448.42, which is this recent weekly closing low, if we crack back below that price range, then this market is still going to be in trouble after we've had 2 weeks of rest. So we've had 2 weeks of rest since making that low for second week of January, I believe. If we break through that, that might be another signal that the market has actually failed in this most recent recovery attempt. So watch that price range. Anything below that would suggest this market still has a lot of downside to consider. And keep in mind, we are still trading with markets that are showing that the MACDs are trading below zero. In fact, if we take a look at this weekly chart here, we can see that the MACDs continue to trade at 2-year lows, if not longer. So the fact that the MACDs are below zero and also trading at lows still suggests that the market is still going to have to do a lot of work to repair the current charts, in my opinion. Speaking of MACDs, if you take a look at the daily MACD, you can still see that we are still trading below zero on both MACD settings. So a lot of work needs to be done to repair the charts. Take a look at the daily here, and the market is coming back to test the RSI top lines on the NASDAQ. If you take the highs and just draw a simple straight line, you can see that this is also resistance that the market needs to clear, and don't be surprised that it struggles to move above that. We can also see that it is coming back to test the most recent break level. So that break point late 2015 in late December, we just draw a line from there. Again, the market is coming back to test that line. If it can't move above that on the NASDAQ's daily chart, we should expect that the next short-term day-to-day swing trade is to the downside. If we take a look at the NASDAQ hourly, here I'm using RSI period of, so the RSI setting here is 14. And I think what the market is doing is it is coming back to test this break point of late December. So that break point on the hourly brought the market off the lows there, and of course we know that we dropped from there. I think we're coming back here, in my opinion, to test that line. So depending on what happens, if we can continue trading above that line, that's good. Otherwise, if we show short-term resistance here, then it would also confirm what the dailies are suggesting, that we shouldn't be too surprised if we begin the week maybe with a pullback, begin the week lower, and also probably the next swing trade, if this market confirms this resistance, that the next swing trade is going to be to the downside. And of course, market bulls would like to show that the market can move higher, and for that to take place, they need to see that the market breaks that red line area, which means the market needs to go way beyond that resistance level. Take a look at the Dow, and we can see here over the last couple of weeks we had made fresh weekly closing lows. While that was taking place, we saw an improvement in the weekly RSI, and that setup has led to a nice recovery over the last 2 weeks. If we take a look at a 5-year weekly for the Dow, just like the NASDAQ, we see that this makes a lot of sense, because if this market is to move higher, it needs to hold current levels, and it is doing exactly that. So this is a strong reason, or a strong explanation or demonstration that the market might actually be looking to go higher. This line has been very good in telling us where the market is going to go ever since it moved outside or above this range late 2011 for the lows there. We've been coming back, testing that line successfully. Market's been going back to new highs. We came back here, did the same thing, we recaptured it here. We had a multi-week rally, did not go to new highs, but here again we are doing the same thing. We've gone below the green line and back above it with uniform action, suggesting that, this could actually be good enough to stem the recent slide. Keep in mind that if you take a look at this weekly chart, you can see that if you take the intraday lows here, they also have held. So we see support here in August, and again here January of 2016. That seems to be holding. So as long as the market is holding that green line, that seems to be good enough to give a market a reason, or the reason to continue moving higher. Let's take a look at the Dow Daily, and we can see here that the Dow did not break this daily closing lows on a daily closing basis. So it did not close below August's daily closing low. So that's good enough support. And since then, you can see that it's actually brought people back into the market, and we are seeing this nice recovery. So now the question becomes, how strong of a move can we have? So number one is the top side resistance might be coming in play on the daily RSI. So this here, this line is where the market closed exactly on that line. Anything above that line might be indication of upside momentum. Otherwise, resistance on that line could be a problem. We also see that we are coming back to test this line here. This line gave us sell signal beginning part of this year. So this break point there brought the market off those levels, and now we are coming back to test the same blue line. Resistance there would suggest downside action, so we have to wait and see what the market can do there. So we have two lines which intersect at the same point. First is the top side resistance line, and also we can see that the market is coming back to test the previous break line. All of them exactly where the market closed on Friday. So maybe if we see resistance, we shouldn't be too surprised to see that the market pulls back from current levels. Otherwise, if the market is really starting a new trend, then it needs to clear the resistance on those two lines. Take a look at the Dow Transports. And the Dow Transports here, we can see that they did break in early December. Now the market broke down in late December, early January. So we can see that the break there, short term, brought the market off those highs. And just like the other markets we discussed, it is coming back to test that line. So let me draw that again. And I think, in my opinion, this seems to be an area where the market has been struggling and is probably still struggling. So we've come back to test that level. We had tried to move above that line in December for the highs there, late December for the highs there. We've come back to test that same point. If we can't move above that red line, then obviously the next swing trade is going to be to the downside. Now if we take a look at the hourly for the Dow Transports, we'll see that, let's go back about 6 months so we can see what we're dealing with here. So 6 months of hourly data, RSI setting here is at 26. So just to be clear, RSI setting at 26, and what we need to do is just draw a line connecting the highs, and you can see that it comes to exactly where we closed on Friday. So maybe the market is coming to test the top side, and now maybe the next swing trade might be to the downside. That's what I think, unless the market can jump above that resistance. So if the market can jump that and clear that resistance, then maybe we are entering a new phase. Also, there's another line that we can draw where the market has been stalling on this chart, and it is just somewhere around there. You can see that here we had resistance in December for the highs there, also here resistance for the highs here, and here uniform activity above the red line, back below it for the highs there. So again, we see two lines, one this line here, and the other one is the top side, which the market needs to clear those two lines if there's truly going to be a change in direction. Otherwise, for now, if we show resistance, then we are still looking at a market that is generally pointing down. Now keep in mind the Dow Transports, even as of right now with the move on Friday, we are still looking at the Dow Transports on a monthly chart, still pointing to the RSI trading at 3-year lows, and the MACDs also trading at 3-year lows. So without a monthly gain, or without the market being positive for the month, we don't see any reason here to consider this a buy. It's only when the market starts recovering that we might change our mind. But right now we're looking at the monthly charts that continue to show that the markets are still broken. If we take a look at the S&P 500, and we can see that if you go back to the breakout that took place here, so this breakout here was successful in taking the market higher, and so the market came back. So let's draw that line there, so this range right there, and we can see that the market went all the way up, tested that line, held, came all the way back, tested it here, succeeded, and then came back, tested it here for nice support. It's come back here, did not close below the green line, went below it intra-week, but did not close below it, and now we are holding. So that line has been multiply tested on multiple occasions, but at the end of the day the market has held. So that's good support right there, good support over the last couple of years, coming back here showing support, and now over the last 2-3 weeks support, and also support this week. So that's good enough support. We also see that short term we made a, just like the Dow, slight lower low here, while the S&P 500 was showing an improvement, which is good on the weekly chart. And just like the other markets we discussed, if we go back to a 5-year weekly, we can see that this is actually good enough support to begin a new leg to the upside. If the market can build on this, we know that this could actually be a strong area where the market has been bouncing, and anybody who used this green line for support over the last couple of years at least had a chance of playing the market for a bounce. And so we are seeing the same thing here. As long as we remain above that green line, then the market has a chance of moving higher, unless for the first time in a couple of years we stay below the green line. Take a look at the S&P 500, and just like the other markets we've seen, it's coming back to test the top side, which might explain why Friday's move closed at the highs for the day, because the market probably wanted to come back and test this line here. That's exactly where it closed. So I guess we'll have to wait to see whether it can move above that. If markets can trade above that blue line, that's good. Otherwise, if we show resistance, the next swing trade is going to be to the downside. And of course, we are coming back to test the break of 2016, as we know that the break of 2016 here brought the market off these highs, and now we are coming back to back test that line resistance on that line would also indicate that the next swing trade is to the downside. Take a look at the S&P 500 hourly, and on the hourly we are coming back to test this line, which has been a problem recently. So here, right there, because this was the break line in late, so right here was the break of late December, coming off those levels, and now we are coming back to test that. It so happens to be just slightly below 61.8. So clearly resistance would mean markets go down, while a breakout would suggest that now the market is really starting to press the agenda to the upside. And since we closed on the line, I guess we have to see which way the market decides it wants to go. And also on the 30-minute chart, so one way you can look at this is we are still generally in an area where the market is still showing. So if you take the highs there like that, you can see that the break of this trend line here, just like we saw in the hourly, brought the market off the highs. The highs of late November came on this somewhere around here, which is there, and also resistance close enough for the highs there. So above the red line would be good for markets, resistance on the red line, and then we see that the market starts the week with a little bit of a pullback. Even though we discussed this at the time, but now we can see on hindsight that the VIX failure to hold above the previous weekly closing high of 2803. So the VIX had come back and was attempting its best to close above 28.03. So that would have been a breakout above the previous weekly closing highs. It came here, and during all these weeks here, it failed to close above that. So that was a sell signal for the VIX, which was generally a buy signal for the general market. And now we are coming back and we are showing potential resistance on a level where the VIX has been stalling. So if you go back and check where the VIX has been stalling over the last couple of years, it's been around this level here, short term, showing resistance with uniform activity above the red line, back below it there, resistance even during these highs here, and here we broke through it again for the highs somewhere there. Over the last couple of tries that the market has had to move lower, the VIX has been stalling on that red line. So this weekly chart was telling us the VIX was not as strong because it failed to move above 28.03. So in conclusion, I think the biggest takeaway in this current market is how the market responds on its monthly chart. So let's go to the monthly charts, beginning with the NASDAQ's monthly chart. The NASDAQ closed with its RSI just slightly above 50 at about 51.3. And so the key here is if the market holds that 50 level and bounces back above 50 and stays above 50, then this market is truly going to be ready for a bounce. The reason why I say that, take a look at a long-term monthly chart for the NASDAQ, and the last couple of times we held the 50 on its monthly chart. We held here in mid 2010 for a nice recovery. We held here in late 2011 for the lows there, and now we are coming back to test that green line or the 50 level. So the key in many markets across the globe is if they can hold above the 50. The more they hold back above 50, the more we are going to get a good attempt to break out to new all-time highs. I know that sounds fantastic, but that's the case. And also you can see that during the 2003-2007 bull market, the market would come back to test the 50 and hold. So I'm not making this up. It's actually what the market seems to do. So we're coming back to test that level, and of course we'll see what happens. Even during the pullback of 1998, major pullback, the market held the 50 and on to new highs. So let's watch this 50 level, because if the market holds, the suggestion there is that they could actually be setting up to move higher. Take a look at the monthly for the Dow, and also on the Dow, which closed slightly below 50. If it can move back above 50 in the new month, expect that to be the beginning of a recovery leg. S&P 500 also close to its 50, closing at 40, let's call it 49 on its monthly RSI. If it can move back, actually closing just a tad below 50, if it can hold above 50 and we see it recover back above 50, chances are that this market is going to be due for a major rally. At that point, honestly, you'd like to be long if the market is going to recover. Of course, we'll see how things go. Otherwise, on the S&P 500, I think a level we can watch is the recent monthly closing low. So let's take a look at that, which is this monthly closing low for 2015, which is at 1920.03. Watch that level, because should the market still come back and break that again, a break of that 1920.03 level, which is the previous monthly closing low for last year, would suggest that we are still looking at markets that are showing bearish sell signals, because RSI is still trading at 3-year lows, and so are the MACDs. So the risk is still there in the market. The key here is if we can hold above last year's monthly closing low, that would be bullish. Also, if we can hold above 50, that would be bullish. Otherwise, if we break below 1920.03, a break of that trend line would suggest that these markets are still not acting well, and the indicators are making 3-year lows, which being the RSI and the MACD. So depending on which way it goes, we have a couple of things to consider, but generally speaking, we just have to wait and see whether the market can either stay above 50 on its monthly RSI or not. I think that's the key. So just watch the RSI on the monthly above 50, and really you have to be positioned long, in my opinion. Eric Mwadeth, Mwadeth.com. Enjoy your weekend. Good luck, peace and blessings. I am out for now. Shall be back next weekend. Yeah. Of course, I have to say God willing. Who knows? We'll see you guys. I am out. Mwah.